Hello, everyone. This is Bruce at Fleet Capital Management. It is Saturday, June 25th, 2022. Absolutely gorgeous day here in Bellingham, Washington. 70 degrees, blue skies. Summer has finally arrived. Last week we looked at some analyst projections of the market being at or very near a bottom, which I do believe is the case. And we'll look at the charts and see what they say about that, because that's all that really matters. And this week, we're going to kind of look forward as to, again, what the charts are telling us, and also what normally happens following a big downdraft in the S&P 500. I'm going to show you a chart very quickly that's going to shed some light on that I think that will be helpful. As always, the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. Please feel free to subscribe to the YouTube channel, and you'll always have access to all of these videos. If you have any questions at all about anything, just reach out to me, Bruce at fleetcapitalmanagement.com, and we will go over and answer those questions. I was on the phone with a friend the other day, Scott, and he used the 4 words that reminded me of a quote of Sir John Templeton. We were talking about going forward in this market, and he said, yeah, but this time it's different. And the great investor, Sir John Templeton, once wrote, and I love his quotes about the market, but he said the 4 most expensive, this should be words in the English language, are "this time it's different." It really isn't. Another market analyst, I don't remember his name, once said, the market may not repeat itself, but it rhymes. You know, it's never exact, but it's pretty close. And when we look back in history, we can see that. So yeah, there's a lot of garbage going on right now in the country and around the world, but when is there not? So no, the market is not different. And the market's not different because companies have their primary goal of profit. That's their fiduciary responsibility to their shareholders. I mean, that's the law. So it's never really different, because if you were on the board of any major company, you would be advising and helping the management to figure out how to become more profitable. And that's what the stock market is based on. One other quote that Sir John Templeton made that I always liked is, the time of maximum pessimism, I think we might be there, is the best time to buy, and the time of maximum optimism is the best time to sell. The great Warren Buffett said the same thing in a slightly different way. He said, buy when everyone is selling and sell when everyone is buying, and you will be a profitable investor. So I think pessimism's pretty high. Over the last couple of weeks, I've been suggesting I believe we're at a bottom, but no one knows until afterwards and we look back, but it sure does feel like that. So let's go on. So I promised to take a look at what happens with the market following significant downdrafts. And this is the S&P 500 return after a 20% drop, and we're there. And this is going back to 1957. And I think I'll just go down here. This was COVID. This is our most recent. The market dropped over 20%. And 1 month later, the market was up 11%. 3 months later, the market was up 22%. 6 months later, the market was up 36%. And 1 year later, it was up 58 or 59%. And we can look at all of these. We can look at the massive, this was the biggest downturn that we've had in recent memory. This was the Great Recession of 2008-9. The markets were down all of 2008. That's why there's negatives there. But 2009, after we hit the bottom, you can see the market responded. 3 months later, we were up 22, and then 38, and then 47. And feel free to look back at all of these time frames. The reason 73 is a negative is because that was a 2-year, 73, 74. But in 74, then the market tended to rally. So after we have big downdrafts in the S&P 500 or the market, generally speaking, not 100%, but a very significant amount of the time, we have pretty strong rallies to the upside. And I suspect that that is exactly what we're going to happen in the second half of this year, which we are quickly approaching. Before we leave these slides, let me always remind you, if you would like to do a video conference with me, just one-on-one, so we can look at your account specifically, just go to my website, Fleet Capital Management, click on more, click on Bruce's calendar, pick a date and time, and it'll be scheduled. And we will have, it's just that easy. And we'll have a one-on-one together to look at your account. So let's look at where we are and what the charts tell us is happening. We are currently right now, if you remember these dots, these are two different time frames for ATR, or average true range. And when we have the pink and the red stacked, that is signifying a downtrend. And yes, we're getting very close to hitting that again. And I hope we break through. And if we break through, we will be right on our way back into an uptrend. But look what happened here. We've gone up to these dots before, and I've talked to you about support and resistance. Right now, these dots are acting as resistance. Resistance is like a ceiling, and the markets will hit that ceiling and fall back a number of times, but eventually the markets will break through that ceiling, and then those areas, yes, they change colors and they become support. Meaning, if we look back in time, let me show you a good example of this. Well, here we go. The markets are above the lighter colored ATR levels, and they went down to it. It acted like support. So they will act like support when they're below them until it breaks. And then they will act like resistance when the prices, when the ATR dots are above, which they are now. So this is one of the main gauges I use. And right now, even though the price is really close to it, we had a very strong Friday yesterday, we haven't broken through yet. And the first thing we need to break through is just the red dot. And then we'll have what's a red on top and a blue on the bottom, which is a no trade zone. That just means we're going sideways. We need to break through both of those ATR levels before this analysis considers that we are in a new bull market. Now, secondarily, we have this green line, which is the 20-day moving average. Don't worry about the blue line. That's a 5-day. That's for trading. But we have the 20-day moving average, and the gold is the 50-day moving average, and the red is the 200-day moving average. Now, using just those technical tools, a bull market will not take place until the 20 is above the 50 and the 50 is above the 200. But if we just get the 20 above the 50 and we were to break the ATR dots, even though we were still below, we're going to start moving into a bullish mindset. If we get, there are 4 different ways I look at trends, and if we get 2 of them, if we get 3 of them, we don't have to have all 4. We're going to start moving in quite rapidly. So based on this chart, we're just not in an uptrend yet, so we're still going to be cautious until the charts tell us that we are in an uptrend. So one of the methods is ATR. The second method is those 3 moving average lines. A third method is the Go No Go Trend Pro that I use. And remember, what they do is they color their bars, and pink and purple, if you will, and pardon me, I'm a little bit colorblind if those aren't exact, but pink and purple are considered a downtrend. The darker color is a strong downtrend. The lighter color is a weaker downtrend. So we're still in a downtrend. The next color that could come, and it will soon, if we have a strong early next week, which I don't know if we will or not, but I hope so, then we could turn to amber. Amber is what they call their go fishing color, which means we don't know yet. We could be in a transition, but don't do anything when we're in a transition. We need to get back into the aqua and the blues. So if we get back into an uptrend on this chart and we start to break through these ATR levels, that's really important. And the 20 is above the 50, we're going to start going more and more aggressively into a bullish stance. Once the 50 is above the 200, we're in a full-fledged bull trend, and we are 100% invested and moving forward with that. Okay, so I hope that helps a little bit. We're just not there yet, but we're getting close. Now, There is, for my more aggressive clients, we use a little shorter term time frame. On this side, we have the daily chart. And instead of using a 20 and 50 moving average, we're using a 5 and a 14 moving average. And that looks like it might be getting ready to cross. And on our DMI lines, remember we have positive and negative, that looks like it might be getting ready to cross. So for the more aggressive clients, we use a little quicker impetus to get us more fully invested. On the left side of the chart, and again, this is for the more aggressive clients, this is a 60-minute time frame. So each bar is 60 minutes. And I use this quite a bit for my options trades. And actually, we have been doing really well with our options trades on a very short term. Here, I'll just show you. Here are 2, 4, 5 trades that we've made, and then and they've all been positive. They won't all be positive. And then here's a couple that we've made in client accounts, and they've been doing really well. I mean, one of them had almost an 18%. RTR is return on risk. Return on risk. How much did we risk and what was our return on that amount of risk? And that was almost 18%. This was almost 12%. We're averaging almost 15%, which is really good. So this is a system that I use, and then I am testing. I use this for clients. These are live in client accounts. And then I'm testing another system that I've created. Here it is. And I just put on a trade on Friday. It's currently profitable, and I'll show you what caused that trade. This was on the Qs, and if I go over here to, let's see, bear with me one second, I go to QQQ. So now we're looking at the NASDAQ, and we're looking at the 60-minute chart. You can see that this gray line, it's called the ADX line, crossed above the negative DMI line, and that triggered a trade in this another option system. And I placed that trade just the other day, and it's currently quite profitable, but we will see. I test these on my own account first. But all of these positive options trades, the key with those trades, the two keys is, one, they're very short term. They're 7-day investments. And on average, we hold them about 3 or 4 days before they hit profitability or we close them. The second and I think the most important takeaway of those options trades is we really don't care what direction the market's going. If we get a signal that is positive, like this one was, we do a positive options trade. If we get a signal that is negative, we do a negative. Here was a negative signal, and we did some bearish options trades for clients, and they worked out very, very well. So the neat thing about the options trades is they're really short term, and they are agnostic to the direction of the market, and I like that a lot. The next thing I want to go over, so what we've done so far is we've looked at trend. We're just not in a bullish trend yet, so we're going to still continue to be cautious, but things can change very rapidly. The next thing is I wanted to just take a look back. I've been getting a few calls on our defined outcome ETFs, and I pulled up one of the 2 biggest holdings that I have for clients is NAPR. This one's based on the NASDAQ 100. You can see that, remember, the dark line is the investment itself. That light line is the NASDAQ. So the NASDAQ has gone down significantly more. Actually, you can see it here. The return for the Qs or the NASDAQ's down almost 19%, and the investment itself is down only 10%. Still down 10%, but a significant betterment than what the NASDAQ is down. And then the other thing is, when the investment is in this gray area, and that's down to 15%, you can see it right there. Again, I just want to remind you, if today was maturity, this snaps back to just about 0 and you get your money back. Okay, so the losses you're seeing in your account when you look at Advisor Client or Blue Leaf, those are losses if you sell the investment today, and the Securities and Exchange Commission requires that we report that way, because you do have the ability to sell today. And if you did sell today, you would have a 10% loss. that would be absolute foolishness when you know that if you just hold to maturity, you don't have any loss at all. So this is one of the two largest holdings in defined outcome that I have. And I think I've kind of beat that one to death, just showing you it's really not your loss. And quite frankly, at its maturity, I don't think we're going to be dealing in this gray area anyway. I think we're going to be up in the positive. So I think it's going to be a moot point. But these losses are only if you sell today. The other big one that I own is BAPR. I own others, but these are the two biggest holdings. And you can see that the SPY is down. This is as of Friday. The SPY was down 13.5%. The fund was down 9.47%. And that buffer is 9%. So if it closed today, theoretically, you would be down 0.47%. Probably with fees, you'd be down about 1%. But a whole lot better than being down 13.5%. So if it has a B in its symbol, then you know that your buffer, that's the B, is only 9%. If it has any other letter like N, like we just looked at, or I, or K, or any other letter other than B, your buffer is down 15%. That's a really easy way to remember. But again, these losses are not your losses if you hold to maturity, and I would never sell you prior to maturity because that just absolutely makes no sense whatsoever. So let me see if there was anything else I wanted to show you. I think that's it. We're still in a downtrend. For the last couple of weeks on these videos, and feel free to go back and take a look, listen, I've been saying that I felt like this is a bottom. Right now, it looks like this is the bottom. Will we go back and retest that bottom? It's very possible, but then if we bounce back off, then again, this was the bottom. It's not the bottom if we go lower. Don't know what's going to happen. Doesn't feel like that's going to happen right now. It feels like we're definitely in a bit of a very, 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 very short-term uptrend, but we're still in a down situation for now. So that's the story for this week. Things are looking better, but they're not in an uptrend yet. And you may have noticed on my emails, I'm doing a trend analysis showing you long-term trend and intermediate or shorter term trend, and they're both still in the negative. The first thing that needs to change, and I have a feeling it might change very soon, is we need that short intermediate trend to become neutral and then bullish. But right now it's still down. So if you have any questions about any of this, let me know. I think, again, like I said last week, I think the interest rate increases from the Fed are working. We're seeing real estate slow down. We're seeing timber prices fall like a brick. We're seeing gas prices come down. So I also think that we may have peaked with inflation. I really believe we have already peaked with inflation. I don't think it will go higher. And I think that we may have already seen a bottom for the market, but I can't tell. I will follow the charts and I will do exactly what the charts tell us to do. So if you have any questions, reach out to me. I'm always available, and I will talk with you soon. Thanks a lot. Bye-bye.